Welcome to AlphaFunds, your channel designed to support your investment decisions with clarity, strategy, and a deep understanding of what moves the market. The recent escalation of the Israel-Iran conflict has injected a new wave of uncertainty into global markets. Now, while many are fixated on the human toll of the war, astute investors are keenly aware of its profound implications for the global economy, financial markets, and of course, their own investment portfolios. With every passing day, this conflict's repercussions are becoming more apparent, making it imperative for investors to have a multifaceted understanding of the situation and how it's likely to evolve. That's why in today's video, we're going to go beyond the surface level and delve into the deeper implications of the Israel-Iran conflict, analyzing its potential impact on everything from inflation to commodity prices, the geopolitical landscape, and your investment strategy. So whether you are an avid investor or just someone looking to better understand the complexities of the modern world, join me as we unpack the multifaceted ways in which the Israel-Iran conflict is set to shape our collective futures. Now, let's talk about the primary concern that's weighing heavily on investors' minds. How will this conflict impact inflation? And the answer is quite stark. The Israel-Iran conflict has the potential to send shockwaves through global inflation rates, especially when it comes to energy and food prices. To begin with, the closure of the Strait of Hormuz, a critical shipping route for nearly 20% of global oil consumption, has already driven up oil prices. This is because the strait's closure has disrupted the flow of crude oil from West Asia to the rest of the world, creating scarcity and consequently driving up prices. The conflict has also raised concerns about the stability of other crucial energy supply chains, including liquefied natural gas or LNG exports from Qatar and other Gulf states. Any disruption in these supply chains can lead to energy shortages, forcing countries to either ration their energy usage or import from alternative sources at possibly higher costs. These increased energy costs have ripple effects throughout the global economy, impacting everything from manufacturing to transportation to heating, thus contributing to overall inflation. But it doesn't end there. The conflict is also affecting agricultural prices. Countries in the region rely heavily on imports of fertilizers and other agricultural inputs, which are now harder to acquire due to trade disruptions and sanctions. This, coupled with the general rise in transportation and fuel costs, makes it more expensive for farmers to produce and distribute food. The result is higher food prices, another direct contributor to inflation. Then there's the impact on global supply chains. The conflict is causing delays and disruptions in the flow of goods from Asia to Europe and the Americas. Not only does this increase the cost of doing business by extending lead times, but it also adds to inventory costs for businesses as they try to maintain sufficient stock levels. All these factors combine to paint a grim picture for inflation. The Israel-Iran conflict is not merely an isolated event. It's a black swan event that's affecting the entire global system, threatening to push inflation rates to levels we haven't seen in decades. For investors, this means that the era of cheap borrowing and easy profits might be coming to an end. It's essential to adapt to this new reality, reevaluate your investment strategies, and prepare for a period of heightened volatility and economic uncertainty. Next, let's shift our focus to the world of investments. What does this conflict mean for asset prices, and which investments are poised to benefit? Well, first and foremost, we need to address the elephant in the room, the stock market. Global equity prices are feeling the heat of the conflict, plummeting as investors retreat to safer assets. The economic uncertainty sparked by the conflict has led many to cut their losses and seek refuge in bonds, gold, or the safety of cash. This trend is particularly pronounced in sectors heavily reliant on Middle Eastern oil or trade, such as oil and gas companies and shipping firms. On the flip side, however, some sectors are showing resilience. For example, defense stocks have been on the rise as investors anticipate increased military spending in the region. Similarly, pharmaceutical and healthcare companies are seeing a boost due to their stable demand even during economic downturns. Looking ahead, it's crucial to remember that markets are forward-looking entities. While the immediate future remains clouded with uncertainty, long-term investors with a horizon of more than 5 years should consider this a buying opportunity. History has shown that periods of heightened fear and uncertainty often present the best opportunities for long-term growth. However, exercising patience and discipline is paramount. Avoid making rash decisions driven by panic or blind optimism. Instead, adopt a measured approach. Diversify your investments and focus on companies with strong fundamentals that can weather the storm. Shifting our focus to bonds, sovereign debt is currently enjoying a surge in popularity as investors seek safety and stability amid the escalating conflict. As a result, bond prices have risen and yields have fallen, offering an enticing alternative to the volatile stock market. However, this trend is not without its drawbacks. A prolonged conflict with no clear resolution could keep government borrowing costs artificially low, potentially distorting markets and discouraging investment in riskier but potentially more profitable ventures. Furthermore, central banks may face challenges in normalizing interest rates if investors continue to flock to bonds as a safe haven. This could prolong the era of low interest rates, hampering banks' profitability and complicating efforts to tame inflation. And what about gold, the age-old safe haven asset? Gold prices have been on a steady climb as the conflict rages, rising almost 5% since the hostilities began. This surge reflects investors' growing anxieties over the conflict's economic fallout and the potential for a broader geopolitical confrontation. Historically, gold has served as a reliable hedge against uncertainty and a declining currency, making it an attractive investment during turbulent times. Finally, let's discuss currencies. The Israel-Iran conflict is playing out against a backdrop of a weakening global economy. The United States dollar, often seen as a safe haven currency, has been strengthening, making it more expensive for countries to import goods. Conversely, emerging market currencies, already grappling with the impact of rising U.S. interest rates, have been depreciating, leading to inflation and economic instability. As the conflict drags on, these trends are likely to intensify, putting additional strain on economies worldwide. So what does all this mean for you as an investor? In essence, the Israel-Iran conflict is exposing vulnerabilities in our interconnected world that we can no longer afford to ignore. Supply chain disruptions, the over-reliance on Middle Eastern oil, and the potential for a wider regional conflict all pose serious threats to our collective economic security. Now, more than ever, it's crucial for investors to adopt a proactive and diversified approach to portfolio management. Don't limit yourself to a single asset class or region. Instead, spread your investments across different sectors, industries, and geographical locations. Consider investing in defensive sectors like healthcare and consumer staples, which tend to be more resilient during economic downturns. Also, don't overlook the potential benefits of alternative investments such as real estate or private equity. These assets often offer diversification benefits and can provide a buffer against market volatility. Lastly, keep a close eye on your portfolio's performance, making adjustments as needed to reflect changes in the market. Remember, investing is not a passive activity. It requires constant vigilance, adaptability, and a willingness to learn from the ever-changing dynamics of the global market. In conclusion, the Israel-Iran conflict is far from an isolated event. It's a catalyst exposing deep-rooted vulnerabilities and forcing us to reevaluate our strategies in an increasingly unpredictable world. By adopting a diversified, proactive approach to investing, you can navigate these choppy waters and position yourself for success in the long term. Stay informed, stay adaptable, and above all, stay invested. Your financial future depends on it. Thank you for watching. If you found this video helpful, please hit the like button, share it with your friends, and subscribe to our channel.